Strange things are happening at a recently hacked multi-chain protocol, and is there a new bull case for Cardano? This is your Altcoin Buzz News. Hey, what's up everyone? My name is Cody Buffington. Make sure to like, subscribe, and turn on notifications so you know when I drop our latest content. Follow us on Twitter, AltcoinBuzzIO, and as always, this is not financial advice, and we wish you the best of luck in your crypto ventures. We have a new exclusive campaign with Bybit with up to $81,000 in prizes. You can now earn up to $30,000 just based on how much you deposit and trade. We're also launching our brand new trading competition with up to $51,000 in the prize pool. The idea is super simple. The more you deposit and trade, the more you earn. To find out more, just click the link in the description below. The Bureau of Labor Statistics has released the Consumer Price Index data for the month of June in the United States. Furthermore, the data shows that the inflation in the country has declined to 3%. It is noteworthy that this represents a positive trend, as it demonstrates a steady decrease from the previous month's rate of 4% and 4.9% in April. Starting from March 2022, the Fed has gradually raised interest rates with 10 consecutive adjustments, bringing the benchmark federal fund rate to a target range of 5 to 5.25%. The reaction of the Fed to the current inflation figures remains uncertain. It is worth observing whether they will choose to increase interest rates. According to the CEO of Bank of America in an interview with CNN, he expressed his belief that the United States may achieve its inflation target of 2% by 2025. Additionally, based on the current projections of the Fed, it is anticipated that inflation in 2025 could be approximately 2.1%. On longer timeframes, trader Mustache considered the chances of a repeat performance of classic bull runs. The Bitcoin monthly chart he noted this week is in the process of breaking out above its 20-period simple moving average, saying every time Bitcoin made a monthly close above the 20 SMA line, it was the ultimate confirmation of a bull run. For the following 2 years, it never again went below the line except for the COVID crash, adding that the current situation was looking good. My question for you guys today is, would you want your paychecks in crypto? And if yes, which coin would you pick? Bitcoin, ETH, a stablecoin, or an altcoin of your choice? Let me know in the comments down below. Bankrupt cryptocurrency exchange FTX launched a customer claims portal, which stayed live for roughly an hour before going offline for unknown reasons. Many social media users reported the FTX Claims portal went live on July 11th, offering customers of the failed crypto exchange who had accounts with FTX, FTX US, Blockfolio, FTX EU, FTX Japan, and Liquid the opportunity to access their account information and submit a claims for consideration, and users have until September 29th to submit claims. Before it went offline, the claims portal said users would be able to access their account balances as of November 11th, 2022, the day that FTX filed for bankruptcy in the United States. Users still have an option of filing a proof of claims through Kroll's online customer form and via US mail. The debtors in FTX's bankruptcy case announced in June that the firm planned on launching an online portal for customer claims. Bankruptcy proceedings are ongoing in Delaware, while former FTX CEO Sam Bankman-Fried's first criminal trial for allegations of fraud is expected to begin in October. We've also just posted a video on what 4 altcoins crypto whales are accumulating for July, which I'll put in the description below. Arkham CEO Miguel Morel said public blockchains are probably the worst possible way of keeping one's private information private. The chief of the startup blockchain intelligence platform Arkham has refuted claims by the crypto community that his new intelligence exchange is a snitch to earn or dox to earn system. On a July 11th Twitter space, Arkham CEO Miguel Morel discussed the public relations debacle that's unfolded this week over his marketplace. Arkham's Intel Exchange aimed to de-anonymize the blockchain by rewarding users with a new token, Arkham, for revealing the identities behind otherwise anonymous blockchain addresses. It was launched on Binance Launchpad as a token sale this week. The platform rapidly generated a lot of criticism on crypto Twitter and was dubbed a snitch to earn system. Morel disagreed with these claims and justified the platform, saying it was designed to uncover scammers and hackers behind crypto exploits. Publicly available blockchains are probably the worst possible way of keeping one's private information private, he said, before adding that Arkham would retain control of the data, saying it's not a completely free market. So it's not like anybody can just post any piece of information and then it can go online. There are a bunch of restrictions and guidelines, all of which will be rolling out. Morel stated the primary focus of its Intel exchange is uncovering trading firms, market makers, exchanges, and very large institutions. He added these hedge funds and trading entities are making money off information about who's buying and selling large positions of a particular token. Another participant in the Twitter space pointed out that Arkham has a responsibility to prevent abuse and may facilitate false accusations by so-called crypto detectives. However, Morel maintained that it would be properly governed, saying thankfully it'll actually be more vetted and more regulated than something like Twitter or Facebook because every bounty needs to be approved. This raised even more concerns from Rand Neuner, who said, "My issue is not with the system, my issue is with your company managing the data." Arkham came under fire this week for leaking users' emails via its web link referrals program, which includes an easily decipherable string of characters and referral links that reveal their referrer's email address. The company has also made some costly mistakes in recent past, such as a false alarm the firm raised that caused the crypto market to fall 7% in an hour. Shares of Coinbase jumped as much as 16% on Tuesday after the crypto exchange reached an agreement with Cboe's BZX exchange to maintain a surveillance sharing agreement for 5 of its spot Bitcoin ETF applications. The shares climbed to a high of $92.15. The filing said on June 21st, 2023, the exchange reached an agreement on terms with Coinbase, an operator of a United States-based spot trading platform for Bitcoin that represents a substantial portion of US-based and USD-denominated Bitcoin trading, to enter into a surveillance sharing agreement. Amendments were filed for all 5 of Cboe's ETF applications, including Wise Origin, WisdomTree, VanEck, Invesco Galaxy, and ARK21 shares. The surveillance sharing agreement, also referred to as SSA, has become an integral part of all ETF applications filed recently. The SEC has stated for years that these agreements are necessary to prevent market manipulation. On-chain growth, a surge in DeFi use, and a positive technical outlook could signal a breakout in the ADA price. ADA received a big blow at the start of June when the United States Securities and Exchange Commission regarded it as a security in its lawsuits against Binance and Coinbase. The lawsuit triggered a 42.5% drop in ADA's price from 37 cents to a 2-year low of 21 cents within a few days. Additionally, the token faced further downside selling pressure due to delisting on US-based trading apps Robinhood and eToro. However, under the hood, the network has been making progress with an uptick in DeFi activity after a scalability upgrade in May. The technical and on-chain analysis of the token also shows potential for a positive recovery. Over the years, Cardano has come under some criticism for continued delays in network updates. Cardano's founder Charles Hoskinson attributed the setbacks to betting on the wrong technology and being a bit ambitious with the roadmap, acknowledging that 85% of the initial roadmap had been completed. Nevertheless, the network recorded an uptick in activity after the implementation of the long-awaited scalability upgrade Hydra, which launched in the first week of May 2023. The total fees paid on Cardano surged to a 1-year high after the upgrade before collapsing amid the SEC's lawsuit. However, the activity has been on a consistent uptrend over the past few weeks. The total ADA deposited in DeFi applications on Cardano has risen strongly, reaching 2 times its peak value during the bull market of 2021 per DeFi Llama data. The trading volumes on Cardano's decentralized exchanges has also recorded a major uptick since May's Hydra upgrade. Hydra is their layer 2 scaling solution that is designed to increase the throughput and scalability of the Cardano blockchain by processing transactions on a sidechain. Additionally, a Jarvis Labs report found that ADA is one of the most decentralized layer 1s out there based on Nakamoto's coefficient, which measures the minimum number of entities that collectively control 33% of all coins staked in the network. A higher degree of decentralization will act in Cardano's favor in deciding whether or not it's a security in the United States. On-chain analytics firm Sentiment recorded a high amount of sales at lower prices in the first week of July as prices rebounded toward the 30-cent resistance level. Sentiment's analysis added that the levels of profit booking exhibited oversold conditions, making the chances of bounces increase. In one of the biggest crypto hacks in history, hackers drained cross-chain bridge Multichain of $125 million last week, and blockchain analysts are now saying it might have been an inside job. In a Monday report, blockchain data firm Chainalysis said the exploit appears to be a hack or a rogue pull by insiders that has led many ecosystem participants perplexed. Multichain, previously known as AnySwap, is a cross-chain protocol, meaning it facilitates the exchange of different cryptocurrencies across multiple blockchains. It has been locked since May due to what is described as a technical issue, with users unable to make transactions. Then over $125 million disappeared in abnormal transfers last week, and just yesterday another $103 million in crypto was moved to various blockchain addresses. Busin Alert on Twitter said $24 million in USDC, $29.6 million in FUSDT, $2 million in Wrapped BTC, $17 million in Wrapped ETH, $10 million in ETH, and $10 million in DAI, a total of $103.2 million. Their transfer behavior includes a transfer of a large amount of assets via privileges. Assets are from multiple chains involving a large number of private keys, a long time interval between transfers. This indicates that the attacker may have taken control of all the assets and is not in a hurry to transfer them. Based on the previous analysis, we speculate that it may be an internal operation. The exploit was due to the project admin keys being compromised, if not being used by the admin directly, and Chainalysis said this is evidence of a rug pull. While it is possible these keys were taken by an external hacker, many security experts and other analysts think the exploit could be an inside job or a rug pull due in part to the recent issues suffered by Multichain. We have a new exclusive campaign with Bybit with up to $81,000 in prizes. You can now earn up to $30,000 just based on how much you deposit and trade. We're also launching our brand new trading competition with up to $51,000 in the prize pool. The idea is super simple. The more you deposit and trade it, the more you earn. To find out more, just click the link in the description below. That's it for Altcoin Buzz News Update. I'm your host, Cody Buffington. Thanks for watching.